The following is a presentation of TFNN. Live at TFNN, the BullBear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks. This is Tom O'Brien. Appreciate you growling and prowling out here with us. Right now, we get the Dow Industrials up 30, Nasdaq's down 9. You get the S&P's off 10, gold's up 9. We get oil flat out there at 93.28. You got the bonds up 24 ticks. King Dollar, she's down 220. And folks, if you haven't test drove the Nadex platform yet, come over to our website at TFNN. You're going to see the banner right in the very top. On the side, you can test drive that platform. They'll put $25,000 of funny money into it. And bottom line is that you'll see just how dynamic this platform is. If you happen to be in the New England area, Darrell, Mott, and myself, we are going to be at the Boston Marriott, which is in Burlington, Mass. We're doing a workshop. It's sponsored by Nadex. That workshop, folks, is on May 11th. 8:30 in the morning to 12:30. It's a free workshop. We're going to be giving away approximately $3,200 that Nadex is going to be giving away, including 10 ounces of silver, 10 half ounces, Darrell's diagnostic analyzer, some market insights, and a lot of books. Okay, so market-wise out here, what do we have? Okay, so what I would love to see here this morning, big time, is this cash S&P testing the high once again. Why? Because what you have is this, is that the S&P itself, the cash S&P, April 11th, got up there, come off that high with monster volume. We got pretty close yesterday. We got within about 4 or 5 points yesterday. Right now, it's just the S&Ps are hanging down 3 points. And hanging down 3 points is saying, guess what? I think it can crack it. Now, that being said, what you do have is this, is that the Dow Industrials, well, let's start with the Dow. What you have with the Dow is this. Inside the Dow, we had IBM come off the highs with volume. We had GE come off the highs with volume. We had Procter & Gamble come off the highs with volume. We had Exxon come down, decent volume, but just come down. 3M come off the highs with volume. Okay, big numbers. That's inside the Dow Industrials. So that's saying that the Dow Industrials are starting markdown. Inside the NASDAQ, what we had is this. Inside the NASDAQ, you had Celgene, Biotech come down with volume. Apple basically is pushing the lows with big volume. Amazon this morning is coming down with volume. Amazon's down $15 right now. Amazon's going to make a run for the lower part of the consolidation, and where the danger comes in for all of these equities. Well, for the Dow equities, they're done. They're going down. The Amazon deal, you're going into the swing point of 252 with monster volume. The swing point has 2.9 million. They've already done 3.4, and we're talking that the market has just started out here today. Inside the index today, CLAC, K-L-A-C, I mean, you're talking some heavy damage. CLAC came off the highs, $5, it's down 10%, and it's down with 1.3 million shares. Baidu.com, Expedia, Maxim Integrated, they're all coming down, they're coming down good. Let's go to our man Tom in Tampa. Hey, Tom, what's going on?
Hey, good morning, gentlemen. How you doing?
How you doing, man? You having a good
one?
Good.
Oh, yes, sir. Yes, sir.
Good.
Hey, European central banks, it sounds like it's pretty much a given that they're going to be bringing down those interest rates next week. Do you think we pretty much saw that fundamental impact on what it was going to do yesterday when that thing shot up to the almost the 131 area?
Yeah, it was kind of interesting, wasn't it? Okay,
yeah,
so
it was.
Yeah, so let's take a look at it. So when you look at the euro right now, folks, the euro's at 130.13, and what we did yesterday, it was pretty cool, actually. You know, if you trade this, folks, it was about as good as you get, because what it did is this. It did 100% move on move. And what I mean specifically is this. See, when you bring the euro back to April 17th, the euro cracked pretty good. We went from 132 down to 129. From that point on, the first acceleration up got right to ice, which was 131. Then it cracked again, breaks down to 129.92. That correlation, when it went up yesterday, went right to the top and stayed there literally, folks, about 30 seconds, and then cracked. Now, you're looking to sell the euro, Tom, right?
Right. Mm-hmm.
Okay, so what I would do is this. I would still wait, and this is why. I expect you're going to see one other basically run up. What I do is this. I actually put the orders in and let them sit there. If you're going to put the order in, I'd put it in somewhere over 130.56. See, 130.36 is the swing, the first swing. The second swing is 130.45. And just the deviance inside, it would be like, okay, man, you spike it, and you get a fill there, you're in good shape, man. Do you know what I'm saying? Mm-hmm. I expect that what you have with this euro, folks, is that the euro is in a much larger ABC structure on the way down. You know, what we have out there this morning. I think what you're also going to have, Tom, is that what's going to be tradable now, folks, I mean, I don't know if you like trading all the currencies, but what is going to be tradable now is the yen. You know, I like how the yen is moving right now. The yen's down $1.22 right now, folks.
Oh, yeah, that's been a beauty, too, yeah.
Yeah, and that's going to be, and if you haven't, you know, if you're going to trade that, of course, you can trade in the futures market. You can trade it on Nadex. You know, if you're trading on Nadex, there's a lot less risk involved because what ends up happening is that, you know, whatever you're putting up, that's it. That's your stop. But that yen, I think we're going to have a two-way market now. See, the yen, what has happened, folks, is that that's been a one-way market for 5.5 months. You know, but today's a good indication. And of course, the euro definitely, you know, to me that thing looks like it's toast.
Yeah.
But what you would like to see is one more acceleration up. That would just be beautiful, man.
Yeah, I didn't know if it's going to be anything crazy like that 130, 170, that 132 area that it hit the week before last. I can't see it getting up that high. I mean, I
can't either. I can see it go. I can see it almost getting to, you know, I can see another spike. What happens, folks, is this. Before, okay, let's picture something. If it's something, whether it's a currency or an equity, is going to go higher dramatically, what you'll always see before a big dramatic move up, you'll see, bang, a fast move down. Fast move down, fast price destruction, no volume. When you have a move that's going to be large on the way down, guess what? You see a spike up, fast price appreciation with no volume, and then it falls apart. That's just how it goes. And what that's all about, folks, is taking the stops out on both sides. It's the monster that's in there saying, okay, I want to see if there's any other orders that are in there. They try to clean those orders out before they really put the pressure on, meaning the pressure on if it wants to go up. They go down first to make sure that, okay, the sellers are out. That means that if we get in there and buy, we're going to get action. If you're going to sell short, they're looking at saying, okay, is there anything else up there? A lot of buyers that, if there's no buyers, they're saying, okay, good, let's unload it at this particular point.
Okay.
Cooking, brother.
Yes, sir. Thanks, Tom.
Have a great one, man. Have a safe one. Inside the NDX 100 right now, what you have, folks, is that thing's really getting weak. Since we just come on here, your first acceleration down, NQM3. So if we take a look at this, yeah, that's a good acceleration. So the first spike, we're down 16 right now. Not that that's a lot for the NDX, but what we just did do, we just took out a B point with small ABC. The A point, that's not that small actually. The A point's 54. The B is 31. That's a good one. 41.51. That's $25. That's going to put the NQs at 28.15. You know, bottom line, that's a good number, 28.15. And you could actually hit that 28.15 today. Some of the high volume stocks here, and this will be a low volume day out here today, folks. You have GE. There she is. GE's up 18. You have Sprint Nextel up 4. AIG's down 78. You have Research in Motion. Look at Amazon. Oh, Amazon's the baby. Amazon's taking this thing south. So watch this. What Amazon's going to do today, this is pretty intense actually. Amazon is actually going to go after that swing point today. You're down 16 right now. The swing point on Amazon is 252. that baby wants to go after it. So what you're going to have on Amazon also is this. You're going to have a high volume daily. You're already going to have a high volume weekly going into the swing point. That puts the probability up dramatically. You're going to break the swing point. And if I bring this back 2 years, so Amazon right now is on its way down to 228. You're at 258. It's on its way down to 228. It's going to be pretty wild watching that whole baby shake out. We go over to Apple for a second. We take a look at Apple. Apple also, if we put this on a weekly, what you're going to see, folks, is that Apple has a high volume low. That high volume low that's out on Apple is 391. And that 391 also is going to get tested. Inside the semiconductors, that clack, okay, is going to put huge pressure on the rest of them. Clack's down 537, 1.5 million shares. And, of course, Big Blue is the one that basically probably rang the bell. You know, Big Blue was the only equity inside the Dow Industrials that was acting correctly on the way up. It came off those highs, monster volume off those highs, and it's big problems. Now, we go over to King Dollar. King Dollar yesterday, what did it do? Well, it rejected lower price, did it with lighter volume. Today's even more lighter. Okay, King Dollar is building strength, folks, for higher price. The bond market out here actually today is streaming, and here's some divergence. Bonds basically want to break topside, folks. You know, the 30-year right now is at 148.24. We take a look at the 10-year. They're both right at the very highs. The 10-year is at 132.12. They both want to go topside. And that bond going topside, let me tell you something, is, number one, amazing, no doubt. But number two, the velocity that you're going to see on this move is going to be dramatic. And the reason I'm saying that is that the amount of time that the bonds have actually built cause to break topside, folks, is pretty dramatic. So the market basically is screaming that, you know, we'll see whether that S&P gets tested. I'd love to see it get tested today. Why today? Well, because what ends up happening is that it got real close yesterday. ES, let me just look at the future here for a second. So future-wise, ESM3. Okay, so future-wise, interesting. Okay, so what we have here on the futures, yeah, she's not going to be able to make it today. So what you have in the futures is this. First acceleration up wasn't bad. First acceleration up, we did, let's see, 3,700 contracts, but 3,700 contracts are going into 9,300. That couldn't handle it. Come off that, and it come off that with a vengeance. The first, we're only at, let's see, we're at 8 minutes into this right now, and you already did 6,600 on, no, 66,000 on the way down. There's going to be someone selling out here today, and more than likely with what is left over from yesterday too. By the way, you know, the S&Ps, the CBOE, most of those things they were closed yesterday to 1 o'clock, but there's still trades lingering out here that people are trying to basically get flat. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the Dow up 5, Nasdaq's down 15, S&Ps are off 5. We got our man, Mr. Steve Rhodes, growling and prowling with us. And hey, I got a feeling we're going to be able to start trading that yen, man.
Yeah, well, it had that nice 3 drive to a top pattern that it put in here. I mean, really beautiful. And that's what you really need as this thing was moving up. Now, that 3 drive pattern, the first drive where you actually start from in forming it is on the February 11th. Swing point high got up to 94.48, and then it makes a 1.618 expansion of that, and that completed on March the 12th. And if you take a look at the time span on that, it would have given you the completion date from a time span of April the 10th. Well, the actual high that was made, and it makes just over a 1.618 expansion, but close enough to it.
So they both did a 1.618 expansion. That's interesting, man. Ooh,
yeah,
they
did. It's one of those things where if you're writing a book, you would come in here and you would write this. You would use this chart here, for example, as the as an ideal, as a perfect pattern. And especially with the move that we've seen, inside the yen with the finance ministers having the printing presses going, and all that's really happened thus far is moved down, had a first move down that was pretty nice, and then went back up and tested it, earlier or late last week on the 22nd or the beginning of this week here. And so the pattern is still very, very valid out here. We'll see how it plays out, but same kind of pattern that was in oil at its highs out there. And look, all we're looking for, I know all I'm looking for is a nice, healthy pullback, because it's a heck of an A to B leg.
Yeah, no, totally. And what happens, folks, just so you understand, with free drive, the price projection is the beginning of the drive. And the beginning of this drive is 90.88.
Yeah, exactly.
So
exactly.
It's pretty cool, man. And what also does happen, once you get the first break, then you get a two-way market, which is totally where it's at. Do you know what I'm saying? So,
absolutely, yeah. And I heard you talking about the euro as well, and we take a look at the euro. So I'm big into understanding the candlestick signals inside the markets. Just to try to understand what the bulls and bears are communicating. And we had that breakout on the euro. It tried to get up over a resistance area on April 16th, and it gave it back that very next trading session. That body on April 17th, the close of that body at 1.3032. Most reversal signals and candlesticks most candlesticks are reversal signals. They do have one continuation pattern that's out there. It's called a falling three, rising three, as you know.
Okay.
And it's where you really take a look at these three small bodies inside this larger body on the way down.
Yeah.
And it's when you get a close below it that gives you the signal that that's a continuation pattern. And inside the euro on the daily chart out here, there's nothing else to really support it right now other than, Super Mario, but really should come all the way back down and at least get to those April lows. And I know you're taking a look at a longer term, this thing getting back to par.
Yeah, hey, listen to this. This is you gotta love this. We've talked many times, particularly Steve has talked when we were always together in the morning, and it goes that far back, actually, and when Super Mario come out and said, okay, we're going to basically have this fund, and this fund is going to back everything up. Well, this morning, I'm listening to Tom Keene on Bloomberg, and it was hilarious, man. He says, it's amazing, what the European Central Union has done. He says, their bonds have tightened up and they're getting what they want. And he says, they never came up with anything. It really is.
No, it was a marketing program.
Oh, well, listen, man, when you talk about perception, it's absolutely unbelievable. There's no doubt about it, man. I mean,
Yeah, and what they know is that, with the way that... Look, with the way that we're bombarded with information and world events and what takes place out there, it's very easy to shift somebody's focus.
Yes.
Take a look at Cyprus right now. I mean, I don't know. I don't even know if you can find out. I haven't done any searching myself, but I suspect that they still haven't lifted the amount of euros that even an individual who's got less than 100 grand can take out of their account on a daily or weekly basis out there.
Yeah, no.
That's a real trip.
No, there's no doubt about it. There's no doubt about it.
It's one thing to say that your money's safe because, okay, we're not going to strip you of anything if you have less than 100 grand. But they're also saying, but you can't have it either.
Exactly. No, there's no doubt. And, once it's off the radar, it's like, what is that saying about the newspaper? Today's news is tomorrow's trash.
Yeah. No, absolutely.
And
absolutely.
folks, and it's wrapped in fish, by the way, if you're a fisherman, okay? So it's something to keep in mind at all times. It's just what gets put in front of you. This is Steve Rhodes, Tom O'Brien. Listen, folks, if you haven't test drove the Nadex platform, come over to our website at TFNN. You can test drive that. And these currencies inside that platform, folks, are great little vehicles to trade because you have the fast price moves and you don't have the huge amount of risk. Steve and I will be coming right back, folks.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit, and on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We get the Dow right now up 10. The Nasdaq is off 12. S&Ps are off 5. We got our man, Mr. Steve Rhodes, Darrell Martin, growling and prowling out here with us. And, folks, don't forget, if you happen to be in New England, Darrell and I are going to be up there. It's 2 weeks from this Saturday. Time just flies. 8:30 in the morning to 12:30 at the Boston Marriott. That is in Burlington, Massachusetts. If you want to register, just come over to our website at TFNN, and you get a great education. What's going on, Darrell?
Hey, man, how's it going?
It's going great, man. You ready? You ready for some Boston action up there?
Oh, I cannot wait for Boston. I think we're going to have a blast out there. It'll be really good.
Yeah.
Get ready to eat some pizza.
Yeah, I'm going to have to bring him to Regina's. And, you know, hey...
So, you got no places to go, so you have to be showing me around out there, you know?
You know, I will. And you know what? I'll break. You know what? I haven't had a grain in, I think, a good... maybe 4 to 5 months, nothing. I'm gonna. Maybe I'll have to do it. I'll bring you there for sure. I will absolutely bring you there. There's no doubt that I can't bring you there, because that's, you know, what's so funny, folks, is that, of course, we get the, Nico and Paige are on at 12 o'clock, living a primal lifestyle. And, one of the Tigers saying, I got to bring him to Santopio's, too. I mean, it is. Folks, the two best pizza places probably in the United States are definitely Regina's in the North End and Santopio's in East Boston. There's no doubt about it. It's just, they're great places. So what I did, I was actually off grains for like about 2.5 years, and the first time that I went on, and I saved it for Regina's. And then you know what I did though? Then what I did, I turned around and ordered like 5 or 10 pizzas, and I told them to do them halfway. What happens, folks? This is a great trick. Just so you don't know, if you don't know this, if you have a great place, a pizza place that you like, you tell them to do them halfway and don't cut it, and then you just take them home. And you basically put them in the oven, let them go the rest of the way, then you cut it. It's a whole different ball game, man. So
yeah, no doubt that is the best way to do it.
Yeah.
Absolutely.
You're getting me starving right now, man. I'm telling you.
Hey, so we've got 7 components inside the Dow 30. 7 components with volume off of the highs.
Oh, I like that.
IBM, McDonald's, United Technologies, Procter & Gamble. Procter & Gamble's got an island reversal pattern at its all-time highs. United Health's got an island reversal. AT&T with volume off the top. 3M yesterday out there, and we're coming into sell in May. Can you recall a time where you've had that kind of volume signals off of the top?
Okay, so you're not going to want to hear this, folks, if you're a bull. There's no doubt. Okay. I'll tell you, man, that's exactly what happened, Steve, in 2007. What you had is this, and this is how it came down. What it came down, and we're not going back to 666. I don't see that, right. But my 825's out there. that'll take a few years. There's no doubt. But what you do have is this: is that when you have I was listening yesterday to some of these news programs, and they're saying, oh, all these other ones that have been dead are going up. All that is, folks, is that's the last gasp, okay? When you get the leaders have already come off the highs, and they come off the highs with volume, they're going down, it's just a matter of when this thing tilts. And there's no doubt, and you know what's so crazy about how does this set up that it's in May, and it's going to be. That's what the way this is set up, that it's going to be in May, And, people are going to take their cash and basically, lock the door. And, the bottom line, folks, is that the doors are always small when folks are trying to get out, Hey, Darrell, you see that yen, man? That yen, we're going to be able to start trading that yen, man. It's on $1.43 right now.
I know it's been. Last night I was talking about that yesterday. Right on my show.
Oh, cool.
And I was like, because all their monetary and everything else going on, I'm like, get ready.
Yeah. No, it's
coming up with everything they've been doing. I was like, this is going to be one of the best moves, And there's been some good stuff going on with all the news going on, and there's a lot of movement and the volatility. And I've loved the volatility.
Yeah. No.
You gotta learn to embrace it, So.
And you can embrace it with Nadex. That's the bottom line, folks. There's no two ways about it. And what has happened, which is okay. So this is nice. The euro's starting to move too. See, Tom and Tampa and myself, we want this euro to just spike, man. I'd love to see it spike today too, man. That would just make my day. And the reason we want to spike, folks, we just joined us, we want to sell it. But I want that that euro a bit higher. I'm psyched about this yen, though, because I was sitting here waiting forever for a break. Because what happens, folks, is that, and I'm talking about a two-way deal here, because to me, as Steve was just saying, it was a 3 drive to the top. But what you also have, that was almost a parabolic move. Yeah. So what will happen, you get the A to B that's set up that's unbelievable. And if you can catch the C, it's really going to be a trip. And I think catching the C is going to be when those bonds, the correlation, those bonds want to break topside. It looks like those bonds are going to break topside within, next 3, 4, 5 days, man. They're just hanging up there right now, the 10-year and the 30-year, with some real juice. So.
And what's your call? Where do you think they'll actually head to? I mean,
the bonds. The bonds are going to 160.
Yeah. Okay.
Yeah. If you put up the continuous contract, this is sick, folks. There's no doubt about it. Let me tell you. But bottom line, this is where the lineup is it's pretty clean. that when you look at the pullback, the pullback in the bond market was minimal.
Right.
So that is saying that, number one, it's really strong, and number two, it's like, you take out this B point, man, and there's nothing stopping it. And what you also have out there is that always you continually hear, which we've heard for 4 years, is that the bonds are going to get croaked. Well, what I always say, why? You know what I mean?
Well, I think you make the good point that the way out for the Fed is just let the bonds expire.
Yeah. Yeah.
They don't have to sell.
No, folks, this is the most bizarre part about it. When you hear people saying that the exit strategy, I can guarantee you, who's ever saying the exit strategy has never traded. So picture something. If you're the Fed and you own all these bonds and you can still print more money and the bonds are paying you interest and then that interest gets paid to the Fed and then the Fed pays the Treasury back, why would you ever sell them?
Yeah.
It makes absolutely no sense. It's just like you'll stop buying them, that's for sure, but you never sell them. It just comes in, goes back to the Fed. This is going to end up, this is the wildest thing, I think. This is going to end up being one of the best legal Ponzi schemes that have ever, been on this earth. I mean, because picture something, we're in debt to the eyeballs, but what's happening is that the Fed is printing the money, we're paying the interest back to the Fed's paying it back to the Treasury, and we're all going to be happy. That's a thing that's pretty sick. The thing, to me, and folks, let me tell you something. This is a positive, for all you folks paying taxes out here. Because because the money's coming back to us. We're the ones that are doing the Ponzi scheme. It's sick, but it's a fact, man. And that's the power. Don't ever, and that's where the European countries are out of their mind giving up their power to print, And if you wonder why the U.S. basically will always, if you're wondering why sovereign governments right now issuing dollar debt, they're issuing dollar debt because they know that the full power of the USA is behind it. And that's not going to change. And you can see why it wouldn't change when I just laid out that scenario. Because guess what? You can make mistakes, you can blow your brains out, and all of a sudden you can still get the money back. How's that?
Yes.
That's insane. But you know what? It's happening. and thank God for all of us that it is happening. And then the last part of this, so check out the last part what I'm looking at, as even with the bonds. Okay, so the structure of our debt absolutely has everything to do with how much interest we pay. Well, guess what? The interest we're paying right now is going down exponentially. So what does time do? What time does, folks, is basically get rid of it. So it's going to be interesting watching this whole thing play out. And then I heard a number this morning. Check this out. This number this morning really gets interesting. If you can take all of Europe, you can take South America. No, you take Europe and you can take, well, they were talking about Europe and they were talking about Japan. Japan in 2050 will only have 75% of the amount of people they have right now. Europe is on the same bag. The United States is going to have many more, because of the demographic and because of, folks coming in the country. That's the name of the game, man. It's a no-brainer. So we're looking at Darrell's analyzer right now. I'm looking at the U.S. Japanese yen.
Yeah, moved a little bit already.
Oh man, did it move? There's no doubt. But we're gonna be having some fun with that. I don't think that trade. I think it's too late for that trade right now. But it's certainly not going to be too late in next week. You get what you'd want in this yen, folks, is that you'd want the thing to get weaker again, do some kind of a retracement, and then basically buy the heck out of that thing because on the three drive move, that thing wants to get down to, what do we say, 90, Steve? Is it 90?
Yeah, somewhere right around 90. Yep.
And that is just a huge move. There's no two ways about it, man.
Oh yeah. This morning, we're literally just now passing through the -2 deviation level right there.
Oh, good. Okay.
It's just now getting down there.
And folks, that is very unusual, okay? You know, with the deviation levels, I mean, a one-level move is normal. You get to a two-level move, you know, that's a big move. You get to a three-level move and you almost can buy it. You know, because that's so far outside of the norm. But it makes sense, because what we have had with the yen is that the move up has been absolutely extraordinary. There's no doubt about it. You know what, I started trading sugar yesterday.
Oh, really? Okay.
Yeah.
Really?
Yeah.
Trade some sugar?
Yeah, totally. I haven't traded it about 3 or 4 years because it was moving before, but I think I got it, man. You know, it's going to be interesting. You know, it's 1740 right now, and this is going to get interesting, man. I'd like to see one more spike. What happens with sugar is this, folks. It's highly volatile, but what happens is that right before the close in the market in sugar all the time, they're almost like the small caps. They spikes one way or the other, you know. What I really liked is that yesterday I put the trade on, what day is today? I put the trade on Wednesday night, right before the close. And what happened on Thursday, folks, it was in the front page of the Wall Street Journal on the B section that sugar, the sugar shots were loaded and it's going to go a lot lower. I said, thank you, God. Here we go. I like that.
No grains, but you're eating lots of sugar.
Yeah.
You got to listen to Nico, man. You know, he'll tell you need to back off on the sugar.
No, I know. Hey, listen, man. My biggest problem with sugar is Zambuca. I'm outside of that, I'm all right, man.
Hey, so you know, why don't you update folks on the Tiger Real Estate Opportunity Fund? What you're actually seeing out there? I mean, you're out there, you know, each day buying houses. What you know, and I heard you talking with someone yesterday. You know, and hey, the bull run in gold right now is over with. You know, it's really in real estate. Why don't you update the folks on what it is that you're actually seeing take place out there?
Yeah, absolutely. And we actually had our first conference call last night, folks. Right now, we have 28 properties with 34 units, and that was in the matter of the last 5 months. So what you do have is this. It's pretty interesting because we have BlackRock here, we have Colony here. The market is really tight, meaning that the retail market, the market where we go at the courthouse is still there. There's still 500, 550, 550 that are getting auctioned off. The aspect, what does get interesting is that because rates are so low, the cash flow on them is immediate.
Yes.
And what has happened, now check this out. Now, folks, watch this. This is going to be the sickest thing which people don't understand yet. But I see it happening right now. We can put a place up for rent, and within hours, right, the calls, boom, 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 are coming in, right? And we're getting feedback from the people, and they're explaining to us that you can't get places, and particularly what we do is we do them over, folks, okay? And you can't get decent places because of the fund structure buying so many of them, number one, right? But check this out, folks. This is the biggest impact that is going to happen in the housing market. And what it is this. I read the prospectus of Silver Lake. Silver Lake it's SBY, okay? And inside that, and this is really important to understand, because if you're looking to buy a house, go get it right now. Because let me tell you something, the prices are going to go up, and they're going to go up huge. So SBY, Silver Bay Realty Trust. If you read that, and it's, you know, it's about 150, 170 pages, but read it, okay, if you're in the real estate business. The reason is this. So watch what happens. When the REITs first started in the commercial real estate business, folks, what happened is that now the REITs own all the big apartments. Well, guess what? There's no reason. The funds are never going to sell the single families. They're putting themselves out of business. They're spending billions of dollars. They're never going to sell them. Those are never going to come back on the marketplace, ever. What does that do? Time in the trade, supply and demand. You stay right there, folks. Steve Rhodes, Darrell Martin, Tom O'Brien. We're coming right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darrell Martin, Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. So, guys, so watch this. And, folks, this is really important for you to understand. So, inside that prospectus, what you're going to see is this. So, picture, they've raised billions of dollars. They bought all these single families. They're all cash flow positive. They don't get paid unless they keep the product. So, Steve and Darrell, as I'm reading this, right, I'm saying to myself, oh, my God, people don't understand what's going to happen here. Like, our fund is a closed-in fund. I have to sell all of them within 5 years, okay? Theirs is what they've done. They made it a REIT, which they don't have to. So they never will. So what you have is this. In these communities, that's going to be institutional ownership. And, you know, people make a big deal that, oh, can they do it? Of course they can do it. It's a no-brainer. Okay? It's a hard asset. And all they do, which is helping us, too, all that's happening is that they're raising the rent structure.
Yes, yes.
So they're going to own, folks, the majority of the houses. They're already doing it. They're raising the rent structure, which is beautiful. You know, but it's sad socially. I can tell you that. There'll be a revolt in about 3 or 4 years when people really understand what just happened. But it'll be too late. You know, isn't that wild though?
No, it's good. Yeah, I mean that's playing the Monopoly game in real.
It's playing it in real. And if you know anything about history, folks, okay, if I know anything, I remember the first time I was in England when I saw that the King and Queen owned all of London. And if you don't know that, they do. Okay, they're 99-year leases. And I thought about it. I said, that totally makes sense. Once you get hold of it, why would you get rid of it? And that's what you better get your head wrapped around. The institutions got hold of it. They're getting hold of it right now, and they're never going to get rid of it. It's not going to happen, you know. And as one of the, you know, guys say in the den, transfer wealth from the weak to the strong. There's no doubt about that, man. And it's sad, but that's happening. You know, it's happening right here, right now. You know, if you actually, when we're up in Boston, I'm doing a review of what we are doing on May 9th. So if you're an accredited investor and you want information, May 9th at the Marriott. You can email Kathleen at tigerfund@TFNN. And if anyone else wants any information, just email us. The fund will be closed. We're closing the fund September 31st for new money. So if you want to basically, you know, see how it works, you can see the properties we own right now, you know, and it's there, it's real, and we're cooking with gas. You know, it's pretty wild. No doubt. So market-wise out here, you know, the Nasdaq's taking a hit here, but the rest of them are just kind of flat. So it's going to be interesting watching this shake out. But, you know, as you were saying, Steve, earlier, that there's no doubt inside the Dow Industrials, you get the volume. Inside the Nasdaq, we get the volume. Big time, too. I mean, you know, this, the biotechs, folks, which were the strongest, they fell apart 2 days ago. You know, Apple fell apart, of course. Apple's already done. You know, Apple fell apart a long time ago. I mean, 700 to 400. Give me a break. And people are still saying buy it all the way down. You know, yes. Apple's going to go down in history, folks, as the stock that had the biggest exponential push on the way up and on the way down. There's just probably the most amount of money ever lost. And
it says that's right. It says nothing about you know, that you got to differentiate the company from the stock.
Yeah, totally.
And that's what a lot of people have a tough time doing.
They absolutely do, man. They absolutely do. There's no doubt. And in fact, you know, it's interesting. I was waiting for the Samsung 4 to come out.
Yes.
But after I look at the reviews, I think I'm going to get that HTC One.
Oh, okay, cool.
Yeah, that's going to be interesting. I'm going to go out there and hunt it this weekend. Listen, folks, you stay right there. We got our man, Mr. Basil Chapman, coming up next. Then we get Nico and Paige. Then right down in Dallas, Texas. Darrell's coming back up with you, David White, and I'll be back this afternoon. Thanks, guys. You have a great one and a safe one.
Thank you.
Okay, man.